Greetings, this is Reggie Middleton, and I'm here for the first video in quite some time. It's been 8 months, since last summer. The reason was Veritasium was abroad in litigation, which took a lot of our resources. That litigation is over, okay? It's been settled. It was with a regulatory agency. And one of the stipulations of the settlement was that I would not discuss the litigation in layman's terms. So no questions about the settlement. For those questions about the very token, I direct everybody to go to the Veritasium Telegram group, the main Veritasium Telegram group, whose link will be in the video summary below. Now, to get started with this video, and there's going to be many others. There's actually a significant backlog of research from the Veritasium company's research analysts, the research team. And I will catch up with that research, and I've decided to do very short video snippets to make it easier to digest for those who are not into reading 15 to 30 page PDFs. So in discussing our product, VeGold and VE Assets, and there are quite a few products that we'll go over, but this particular video will be focused on VE Assets, the VeGold subgroup. I was discussing the coronavirus and Asia, and one of the participants in the discussion asked me, "Say, Reggie, what does the coronavirus have to do with VeGold?" Well, it actually has a lot. For one, let's go over what the coronavirus is, a respiratory virus that is very similar, at least in the same group, viral group, as the SARS virus, which hit China and Hong Kong in the 2002-2003 era. Now, let's take a look at Hong Kong. Okay, this is a chart sourced from Bloomberg, which shows the visitors to Hong Kong from 2001 to 2020. This is where the SARS epidemic broke out. Please pardon the typo. Okay, you see there's a significant drop in visitors, but it bounced back, and it bounced back in a year, over less than a year. Okay, this 2019, the latter part of 2019, is when the Wuhan-borne SARS, the Wuhan-borne coronavirus broke out. Again, mislabeled, it's not SARS, but it's related. And you see you have a 99% drop. A 99% drop in visitors. That's significant. 99%. Practically all of it. From over 2,000 visitors per day to fewer than 3,000. That's significant. Okay? Basically, almost all the visitors stopped coming to Hong Kong. Well, what does that mean? Well, Hong Kong gets much of its GDP, or a significant portion of its GDP, from tourism. Okay? In 2018, 17.4% of Hong Kong's GDP came from tourism. Okay? It is now 2020. There is a significant drop, but let's say fourth quarter 2019, since the tourism rate contribution was increasing at an average annual rate of 4.31%, let's give it somewhere around 18 and 19%. Okay, conservative 18%. With a 99% drop in tourism, you have basically all 18 or 19% of that contribution wiped clean. So Hong Kong is going to see a minimum of an 18% drop in GDP as a result of the SARS, and also most likely as a result of the riots that were going on in Hong Kong as well. Okay, now this tourism has a knock-on effect because you have direct contribution to GDP from tourism, but you also have the multiplier effect. Outside of restaurants, you have Hong Kong's significant and vibrant, or at least used to be, financial center. Okay, you have restaurants, you have clothing shops, you have rentals. A lot of that was probably incorporated in the GDP contribution, okay? But the secondary contributions most likely weren't, okay? Particularly the financial portion. Now, that's a big thing, okay? Hong Kong is basically one of the finance capitals of the world. Now, I say expect 20% shave off the GDP of Hong Kong. I think realistically, conservatively, you could say 18%. But you can say that's Hong Kong. That's isolated. But let's take a look at Hong Kong's largest trading partners. Number one, China. We're talking about $314.3 billion worth of trade. Significant. Number two, the US, right here. This is the country where the person who asked me what the coronavirus has to do with VeGold, which we still haven't gotten to yet. Number three, India, Japan, Thailand, Singapore, Taiwan, etc. Okay. Just the trade between China and Hong Kong, right, shows a significant drop. Particularly since, remember, the coronavirus, at least this particular strain, didn't originate in Hong Kong, it originated in China, their largest trading partner. So, let's take a look at China, which is also Hong Kong's largest trading partner, and you will see that practically everybody expects China's GDP to be clobbered, upended, crippled by the coronavirus. Now let's take away the mass media, the pop media, and even the business media's tendency for, if not exaggeration, for drama. I don't disagree. I don't think any objective person could disagree that there's going to be a significant hit. Okay? Now, China has a GDP that drops. Its largest trading partner has a 99% drop in tourism, which is almost 1/5 of its GDP contribution. Okay? We have a bilateral relationship, symbiotic relationship, both infected, and not by the coronavirus, but you're talking financial contagion. Now, China is also is the second largest financial entity or financial sovereign entity in the world, second only to the US. So as we go down, take a look at China's top trading partners. Okay? US, number one. Okay? Hong Kong, number two. Hong Kong is done. Okay? Its largest trading partner was the source of the coronavirus. Significant drop. It had a significant drop. It's lucky you go wipe 1/5 of the GDP off. Okay? You also have Japan, South Korea, sourcing cell phones from these 2 or 3 entities, a lot of electronics. This is worldwide contagion, okay? Not just the viral contagion, but financial pathogenic finance. So, in going through that, let's take a look at how VeGold comes into play. As I go through a lot of these videos and these snippets, you will see that I have had my team go through a significant amount of research to show how VeGold, basically a hard gold-based digital currency, can hold its own through hyperinflation, through recession, and through stagflation. Now, stagflation, which is a combination of inflation and recession, is coming to the forefront in many areas. Many. Hyperinflation mixed with recession is stagflation plus, stagflation on steroids. And you'll see that in several places, and we're going to go through that in detail. But for right now, let's take a look at the performance of VE assets, right, priced in Chinese yuan. VE Palladium, which is digital ownership of Palladium, that's transferable, loanable, is up 70%, over 70%, okay, priced in Chinese yuan. VeGold, depending on which tranche you purchase, is up a minimum of 24.5%, priced in Chinese yuan, okay. Gold is not going up in price. The Chinese yuan is going down in value, okay. Gold is primarily stable, okay. It's the fiat currencies over time that are unstable. So remember, whenever you have someone pitching a stable currency or a stable coin. If that stable coin is denominated or pegged in a fiat currency, it is anything but. There are no stable currencies or stable fiat currencies. I can show you that in the graph. But before I go to the graph, let's take a look at these VE assets priced in US dollars. VE Palladium up 63.41%. VE Gold up 21.07 or 19.56%. The difference is the fees, of course. The kilogram of gold we can source cheaper, so we sell it cheaper. Okay, even from a risk-adjusted return perspective, taking in consideration volatility and risk, right? VE Gold is actually safer and harder than the US dollar, taking into consideration all volatility and risk. We can do the same thing with major fiat currencies. Let's take a look at the euro. Palladium, 70%. Gold, 25% or higher. We can take a look at the pound. And this is all over a year's performance. 65%, 22.7, 21.22%. And the yen. 61.59, 19, 18. So basically, as I said, all fiat currencies over time are highly unstable. Not necessarily from a volatility perspective, from a true stability perspective. The way central banks run the economies is through the controlled inflation of the currency. Now, things get dangerous when that controlled inflation becomes uncontrollable. And that's where we're going to discuss Argentina, Zimbabwe, and other entities, or other sovereign nations. Now, for those that say, but Reggie, okay, CNY, Chinese yuan, okay, it underperformed palladium and gold and silver, actually, but that's for a year, okay? Anything can happen in a year. You had the you had the coronavirus outbreak, COVID-19, I think is what they named it. You had the trade war with the United States, the beef with Huawei, etc. But over time, all sovereign currencies are the best currencies because they're controlled by the government. And yes, they are stable. Well, let's see. If you go from 1 year out to 5 years, let's see how the Chinese yuan has performed. VE Palladium up 268.19% against the Chinese yuan. VE Gold is up 50%. Okay, you can even go over VE Silver. It's up 24.78, the most volatile of the currencies that we offer. And the same goes for practically every major currency. Even the US dollar, the global reserve currency, 229% for palladium, 34% for gold. Euro, story is the same, and euro will be getting significantly weaker, but we're going to discuss that in time. Euro 238, okay, 38. Pound, we could go through the yen, but by now I think you can see a trend. Okay, anybody interested in purchasing our digital gold assets? Basically, and VE assets is a peer-to-peer private capital asset transfer, exchange, and market system. It's very simple. You simply go click open. This opens the VE assets component. You pick something such as grams of gold. Here, you can see buy, redeem, sell. It's just that simple, okay? When you buy it, you purchase the gold tokens. These tokens are not gold-backed cryptocurrencies. They're not gold-backed tokens. They are actually gold. The digital token represents title to the unit of gold explained in the contract. This is titled to 1 gram of gold, right? Held in our vaults that we contract out to. You could do 1 gram of gold, 1 ounce of gold, 1 kilogram of gold, 1/2 ounce of silver, 1 ounce of silver, kilograms of silver, and ounces of palladium, while supplies last, of course. If you want to make a large purchase, so you see there's no more of a particular asset available, it will give you a prompt to contact us, and we'll go and source that for you. So there's theoretically no limit to the purchasing of any of the VE assets, at least the precious metal VE assets. Next up, we'll discuss VE tax credits, additional high friction, low liquidity assets that we provide liquidity and a lack of friction to, and transferability. Okay? Any questions, please hit me up in the comment section of YouTube. Let's not discuss the SEC and regulatory issues, please, or at least the litigation. And if you want to discuss the actual original Very token, I welcome you to go to the Telegram group, whose link is below. There's several. Go to the official, quote unquote, which is not company run, but monitored by admins that we trust. Okay, that link will be below. And of course, you can feel free to put as many comments in the YouTube section, and I will try my best to get to as many as I can. Au revoir. Bye. Peace. And look forward to the next video, which will go through the stagflation scenario building up in many more places than you think.